Hi, everybody. Thank you so much for coming to this session. My name is Staci Warden, and I sit on the board of the Algorand Foundation. And I do want to give a quick plug for tomorrow. Our CEO and our chief economist are going to be speaking. They're going to be the keynote morning speakers, so you don't want to miss that. Of course, COVID has made travel a little bit difficult, and we're an international organization, so I'm here to represent. We at the foundation are laser focused on financial inclusion and inclusion of all kinds. And the reason that this is the first panel of Decipher is because it all starts with payments. Payments is the bedrock of everything else that we're going to be talking about at this conference, and it is the bedrock of financial inclusion more broadly. So I am thrilled to be able to moderate this session. I am thrilled to have such illustrious panelists with me. So welcome, everybody. Rachel, I'm going to start with you. You are VP of Product at Circle. This year, you went from under $5 billion at the beginning of the year to $40 billion now. So my question to you is, get busy. Like, what have you been doing all year? This is not... No, but what do you think has been driving that growth for you? I mean, that's an amazing uptake in participation in 1 year. So, how do you account for that, besides, of course, your own hustle, your own personal hustle?
Hey, thank you. Nice to be here. Nice to meet everyone. I'm VP of Product at Circle. Circle is a payments and treasury infrastructure provider. You also know us as the co-founders and sole mentors of USDC, the largest world's leading stablecoin. And yes, it's been quite a ride. I think the growth is stemming from just the explosions of use cases of a digital dollar. The pandemic last year really fueled the initial flight to safety, the flight for dollar haven, and that was sort of the first wave of growth. And then this year with, the trends of businesses wanting to get access to better tools and systems to operate globally, natively, to transact for tons of different use cases, and I can talk about the different use cases that we're powering, from payments, but not just payments infrastructure and dollars as a settlement medium and payment medium, but treasury products in and of itself. How to have the time value of money with dollars operate on public blockchains such as Algorand. That's really fueling, and we've just seen thousands of businesses worldwide come to us with use cases within payments, with treasury. And specifically, this year we've seen companies like Dapper Labs who are building, digital collectibles and e-commerce like products, and they want to do it digitally native using crypto rails. They come to companies like Circle, who we build, APIs and business accounts and SDKs, and they seamlessly in the background use stablecoins and USDC to build wonderful experiences. So they want to serve consumers all around the globe to, purchase digital collectibles. Those on and off ramps are powered by Circle. They're powered by USDC. The fundamental wallet infrastructure at the end of the day, how, sellers get paid on their marketplace. That's just one major use case that's exploded a lot of growth for USDC in particular, but we've seen treasury use cases as well. Today, I'm going to do a quick plug. I lead the product for Circle Yield. We just launched today for beta. Businesses are also seeking ways to fight inflation, to use their corporate treasury balance sheet, and those dollars are sitting there on their balance sheet not earning anything. So the world of interoperable blockchains provides a better way to connect borrowers and lenders together. So we've seen a very large interest from not just crypto companies, from large financial institutions, and
yeah. No, okay, that's great, and we'll have more to talk about with you. And of course, you did start on Ethereum, but you quickly realized the error of your ways, and Algorand was your second blockchain. So congratulations on that. Alex McDougall, you are, of course, the president of Stablecorp, and you have a Canadian stablecoin. And you bill yourself as the bank-grade financial solutions. And so that implies to me that there's something wrong with current banking solutions and that you're trying to get to bank level but kind of do it better. And so how did you sort of assess that initial problem statement, and where did you kind of dive into to
Awesome.
make it better?
Yes, thanks for the question. Where do we start with the challenges with our current banking system? And I always kind of sum it up, and we're a lot of business owners and founders in this room. Have you ever tried to send a wire at 4:01 on a Friday afternoon and had it not go? And crypto's 24/7, and you basically lose 3 days just to somebody needed to hit a tea time on the afternoon. So Stablecorp, I said it, we build bank-grade financial solutions for the leading financial institutions in the world. So we've been really lucky to work with VersaBank, a Canadian Schedule I bank, who's actually issuing a asset known as VCAD and potentially VUSD in the not too distant future, which are directly bank-issued assets. So they're digital deposit receipts rather than what is typically known as a stablecoin today. And so when we think about what's wrong with kind of the current world and the current banking structure, a lot of it is we have very little willingness to actually tackle the core infrastructure of our existing fiat system. Every innovation that exists right now is at the edge. It's at the final layer and basically focused on consumer. So it looks like we have instant payments with things like Venmo and e-transfer in Canada. But you dig even a couple layers down, and it's still just monkeys on typewriters in the back end. We haven't had actual innovation in the infrastructure of banking in 30, 40 years. And it's if there's payments and banking people in the audience, they'll be the first to admit that as well. And so there's a cap on what we can do when we're innovating only at the edge without getting into the core infrastructure of what we're doing. And so when at Stablecorp we think about issuing bank grade and partnering with bank grade blockchain developed financial solutions, it's really about what are banks good at and how can we reorient that to be done on a permissionless and public chain such as Algorand. So we spend a lot of time in the stablecoin space as that's really sort of banks' bread and butter. We spend a lot of time in the yield space as really optimizing for borrow and lend and connecting borrowers and lenders is the point of banks in the first place, and the custody space as well.
And how are you doing growth rate compared to Circle?
We're launching in January.
Okay, all right. Look out in 2022. We're gonna. Yeah.
We did mint our first mainnet Algorand VCAD yesterday, so we are live on mainnet in a walled garden test.
Okay, fantastic. Jim, I remember when I moved from New York to London with JP Morgan, and I had this nice Citibank account in New York, and then I quickly, as soon as I arrived, I opened a Citibank account in London, and they couldn't talk to each other. Nobody, nothing. I couldn't even see my data, And so when you think about, not to mention sort of the FX, but when you think about these solutions, it really does, to me, is pinned on the international, sort of the FX component of this. And so tell us about 6 Clover and how you're going to try to make life better for international folks.
Yeah, so 6 Clovers develops payments infrastructure. Think of us as a decentralized SWIFT, right? We help companies move value via stablecoins from sender to receiver.
And SWIFT, of course, is the international payment messaging system globally.
Exactly. And one of the things here is we're a payments company. We work with Algorand. Our payment system sits natively on top of Algorand. We had to re-engineer payment capabilities that were known for centralized world and Oracle databases and map that onto an Algorand. We also work with stablecoin providers like Circle and then Stablecorp to be able to move value. Our customers are folks like Bnext, who sit on top of our infrastructure to be able to move money. So that's where we sit relative to the ecosystem. We combine the best of the technologies and deliver a end-to-end real-time payments. So one of the biggest issues today is the payments infrastructure takes time, whether it's a few hours in the U.S. or international. There are big systemic risks. First is the first and foremost you mentioned is a consumer experience. The consumer experience is probably the worst today.
Yep.
So what we're doing here is we're going to be delivering real-time payments using stable coins and ensuring that the FX. We'll talk more about this later, but the FX time is reduced from 3 to 4 days to 2 to 5 seconds.
Right.
So we speak with a lot of regulators in the U.S. and they've mentioned that they've been looking for a solution to reduce the FX risk for banks for a long time. They're trying to regulate that, but they can't regulate technology. So one of the things they're looking for is, are there technologies out there to move this faster? And this really solves a really big problem in the banking infrastructure of FX risk. And that's, we'll talk more about that later.
Okay, but let me just ask you, what piece of it are you going after?
Yeah.
On the payment rails?
So, the whole thesis is there's a whole world of decentralized tools out there, but we don't think the world is ready for full decentralization. There has to be somewhere in between, right? So we're going after existing use cases, enabling remittance providers to move money quicker, enabling payment service providers to pay through the merchants faster, right? So anything that involves payouts, right? So categorized as a decentralized payouts application. So those are the folks that we're going after. Okay,
all right. Chris, this is a good segue. Thank you very much for that. A nice segue into remittances, which are, I think you said $12 billion just out of Spain in remittances, and how many into Latin America?
So there are about $100 billion coming to Latin America.
Yeah.
Just 45 from the US to Mexico every year, which is one of the main problems that we need to solve right now, and I'm trying to solve through Bnext.
Okay, when you say problem that needs to be solved, you're talking about 7% on remittances in a Western Union environment, and
actually 12%.
And
Western Union and SIGA and all of these traditional players are basically taking 10% of the high-earned income that many immigrants have. So we are trying to develop a solution that definitely doesn't take that amount of money. Right now, we just launched a product from Spain to Mexico with a 1.5% charge for real-time payments, powered, of course, by Algorand and Circle. So we are by far the cheapest solution right now for moving money from Spain to Latin America.
Okay, and you are Bnext, which is a kind of a neobank basically. So give us a couple.
So yeah, Bnext is the largest challenger bank in Spain, one of the largest wallets in Mexico. We are about to launch in Colombia, Peru, Ecuador, and some countries in Central America. Right now we have a bit less than 1 million customers between Spain and Mexico. I'm hoping to grow a lot for the next year in several other countries. Challenger Bank basically issue debit cards and allows to their customers to have a broad portfolio of financial services like loans, insurances, money remittances, of course.
And as a challenger bank, for those of you that don't know what that means, it's kind of a digital bank. It looks at all of the old technology of traditional banks and says, we can cut costs in various ways, and we can do things better in various ways, and we have the better technology. That's why many people refer to Algorand as the challenger blockchain, because we see what came before us, and we know all of these ways that we can do it better. And so you are built on Algorand for remittances specifically.
Yes.
And, I don't mean to make this kind of advertising-y, but why is that? Tell us about that relationship between Algorand and Bnext for you.
Of course. So first of all, the technology, it's at least on our belief, the best that you can have in order to move money cross borders. Second of all, it is cheap to move money through the chain. And third of all, we have a great fit with the team. So Sean and Juliana have been super supportive with us, helping us with all of the stakeholders in order to make this happen. So that's why.
Okay. I want to now kind of turn a little bit more to a forward-looking. And so, Alex, maybe I'll start with you this time. What are you focused on going forward? And in particular, I want to talk a little bit about this cross-border piece a bit more. And so tell me what kind of keeps you up at night and what you think is kind of your most important priorities.
I sleep like a baby. I just have 2 kids. No, it's a fantastic question. And I think there's this dream of blockchain that we've sold people for a long time of being able to have these instantaneous payments and instantaneous transactions, and taking out a lot of where the frictions collect around the world through the existing financial system. And we've done a good job of it, but we haven't really made a ton of progress in some of those those really large chunky problems that blockchain was intended to solve in the early days. And
Why is that?
So, and some of that is the technology itself getting all the way out to the edge and making the solutions be able to be used and able to be implemented by the 70-year-olds of the world who sort of manage the existing pools of capital. Some of it is regulatory uncertainty, which I think we're going to talk a significant amount about in the next panel. And some of it is just the lack of sort of coordinated global efforts around trying to make this happen. And so when we think about today of making getting that blockchain evolution from, particularly in the stablecoin world, there's the market today is 140 billion or so. The majority of that is in crypto trading. It's in DeFi. It's in the very native applications that the very native blockchain users use. The minority of it is in sort of this traditional finance world where we're really trying to break in. And that's really where there's trillions of value, not billions of value. And so, I think some of it is what we're trying to do with working with traditional financial institutions to let them do what they do best, which is be regulated, be safe, be transparent, and then let tech companies do what we do best, which is create decentralized assets, create integrations, create amazing ways to do it, and sort of solve this regulatory tech company conundrum with hybrid solutions. And so I think we'll get into FX in a little bit, but one of the big things that's really critical to having these comprehensive cross-border payment transactions is the ability to have decentralized automatable FX that manages in the background. And so as long as we're still reliant on traditional fiat-based FX, you always have to sort of leave the blockchain world, go back into trad world where there's all of these frictions and sinks, and then go back into the blockchain world. And you're never able to get to that sort of fully machine speed connected future. So the more that we're thinking about creating on-chain FX and really thinking about that as a strategic goal, rather than just a byproduct of us having trading platforms and trading pairs that happen to trade stablecoins against each other, that's a really big focus of ours right now, is sort of institutionalizing that FX component of the stablecoin landscape.
Okay, Jim, what do you think about that?
Moving forward, I can give a little history of my journey in crypto and the evolution. I started looking at crypto back at PayPal in 2013. Back in those days, blockchain wasn't really ready. The first, second generation, BTC, Ether, that weren't ready. It required a third generation of blockchains like Algorand that delivers the decentralization. The speed and the cost was really important, right? The second thing was the blockchain was still one of the components, but stablecoin was the next thing that really could unlock the value.
Yeah.
You see, those are the two things, right? The performance of the blockchain, the cost, and also the value transfer in a stablecoin. You can't really transfer a trading token because on a certain day, that trading token can be worth $10,000 or 2 cents, right? That's really critical. And I think moving forward, we spent time with a lot of customers, and there's a lot of mind share right now. Even 2 or 3 years ago, we were going to say, hey, we're going to help you move money faster using stablecoins. They're going to say that's too risky. Now, what we're getting at,
We're going to do what?
they're saying that's too risky, right? What we're hearing now is, okay, we know it's a risk, but we have a compliance team dedicated to this. We have a framework to really lock this down. It's kind of like gambling back 10 years ago. Like, it's super risky, but there's frameworks. Now it's stable coins, right? So moving forward, we're seeing a lot of global organizations really climbing on the bandwagon and actually are starting to deploy. We finished deployments with several. We love to announce that coming up soon, but that's what we're seeing is mindshare. And then last but not least, regulatory, right? There's going to be a panel on that the next, but the Biden administration came out and said, hey, there's going to be a future for stablecoins, and that really unlocked a lot of customers' angst about adopting stablecoins. So I think, so to summarize, it's really 3 things: performance, the utility of the stable tokens, and the mind share. Those are the 3 things that I see in progression, and it's looking good.
Okay. Rachel, when I hear Jeremy Allaire speaking, he says often that, look, we're just trying to fix the payment rails. This is what we're about. We're just a better payments rails. We're not, by contrast, in competition with any kind of central bank digital currency, CBDC. But when you see the explosive growth of USDC over the last year and starting the year before, it's hard not to question somehow how CBDCs, which are in their nascency, and of course there's a lot of thorny problems around them, how they will coexist with stablecoins. And I'm wondering how you think about that and how you approach, the opportunity in that's kind of defined by that, I would say.
Yeah. I mean, I think you're hearing a lot of similar themes and patterns on this panel. Is on one hand is where are you in the stack and what type of technology you're using to really get to the use case. So there's a really advent of public blockchains like Algorand and payment schemes and consortiums, and then there's fiat sound money issued by governments. The two can live side by side next to each other. The market is big enough. I'll give you a couple examples that tie back to payments in particular. ACH is a payment rail. It powers a lot of the U.S. payment systems today. Visa was initially bank consortiums. All of those started as private banking consortiums held by private companies that work together to issue standards, to issue technology protocols, to set sort of the infrastructure layer for how companies and governments and consumers can use the technology itself. I think that's what a lot of us on stage are trying to do, and at least what Circle is trying to do is through the Center Consortium, along with Coinbase and other future members, is to set those standards for USDC and how a new payments rails and institution should work, and we'll work cross-chain, and we'll work on blockchains issued as on Algorand, but that is not a competition with any future CBDCs. The innovation, I think, will come from the private sector, and governments will work with private industry to adopt those standards. But I see that as the role of product builders and private companies to really issue those standards on private networks.
And of course, SWIFT and credit cards started
Exactly.
as private sector initiatives. Okay, so we've got about 8 minutes left. So I want to give each of you guys 2 minutes apiece, and I'll start with you, Chris. And I want you to really put a flag in the ground about what you think is going to happen, what the world is going to look like from your perspective in the next kind of 5 years, and then the next maybe 25 years. And where is this ecosystem headed? Where is your business headed, and what do you think you're going to have achieved in these in these two time frames?
Okay, so on my perspective, I'm talking about the base of clients that I represent. They might not know what Bitcoin or Algorand or Ethereum is, but it is for sure that payments are going to be cheaper, payments are going to be faster. We are going to get rid of the card, the hardware of a card with a chip. Payments are going to be done through smartphones probably, or wearables. And people are going to fight against, at least what we are seeing in Bnext, right? Against the inflation. And that's why the adoption of alternative securities and alternative coins is going to be highly adopted. We are seeing many people from Bnext are willing to buy different securities, even though they haven't bought any stock in their lives. Their first investment, it's a Bitcoin, or a piece of a Bitcoin, or so yeah, that's my view.
All right, that was pretty concrete, Jim.
So, 6 Clovers is an evolution of payments, but before I go into what we see in the future, I want to go back a little bit. I've spent the last 10, 15 years working on payments for the enterprise. There were 3 things that I worked on a lot, but the third thing I really couldn't achieve, and I will talk about that last. The first is delivering a better consumer experience, right? How do you get your money faster? How do you reduce the friction in your flows? That's consumer experience, right? The second is how can people pay with more payment options wherever they sit in the world, right? The third has been really elusive for me, which is real-time payments.
Okay.
Right? Real-time payments was something that was not able to achieve in the last 10, 15 years. That's what 6 Clovers is doing. So we're combining better user experience, more payment options with real-time payments. So the next 2 to 5 years, what we want to do is be able to run parallel to existing infrastructure. We're not going to replace SWIFT. We're not replacing ACH or any of those rails. The reason is because those rails are required for fiat. Our rails are dedicated only for stablecoins, right? So if you believe the next 2 to 5 to 10 years that stablecoin has a future, then that's where 6 Clovers is going to be, right? And a certain amount of volume from the fiat world should move over to the stablecoin world because it's faster, better, and cheaper, and it delivers the better consumer experience. You don't have to say, "Hey, where's my money? Where's my money, Dad? Where's my money, Mom?" Those are the things we want to solve.
Right. You'll be there for them.
Yes, absolutely.
Okay, Rachel.
I'll put a number to that. I think in the next 2 to 5 years, you'll see a part of the money supply, M2 money supply, start to shift to stablecoins and USDC. I think that number will be in the low trillions, precisely because of those value props. It's faster, cheaper, global, interoperable, and fundamentally a better payments and infrastructure to operate for businesses and consumers. So prediction number 1, I think you'll also see within the next 2 to 5 years, I know the next topic is regulation, but Congress really acting and working with the industry to provide guidance and laws for how stablecoin issuers in the United States should be regulated, and it'll likely be under federal banking supervision.
Okay. All right, Alex.
Awesome. So I think there's going to be a really, really interesting sliding doors moment in the next few years, because I think it's blockchain eating the world is inevitable, but it's how that actually gets done. And so if we on this panel, if we're able to deliver 2, 3%, 5% improvements to the bottom line, that's great. That's probably not going to be the impetus that replumbs the entire financial system. It's going to be driven then by governments and CBDCs because, for their own purposes and because, that is the way that the financial system should work. So we sort of have this opportunity as private sector technologists to create these step function better value propositions and recreate our own infrastructure ourselves. And this is really where the next 5 years is going to go. I think at the end of next 5 years, we'll have a better version of today's financial system. We'll have more transparency, more inclusion. All of your assets will be earning yield and optimized at rest all the time. You'll have blockchain abstracted all the way down to the bottom end, and you won't sort of be able to see it like you can today. All of those things are going to happen in the next 5 years. It's really the 25-year part where if it's driven by CBDCs, then that's probably where it's going to end. We'll get a better world, we'll get some more efficiency, we'll get some payments, and there's a ton of downsides with CBDCs that we won't get into right now. But if this is, and private sector is not even the right word for what we're sort of creating here, if this is technology-driven, individual-driven, human-driven, then we stand a real chance of having that 5 to 25-year period be something exponential. And we're creating this crazy cryptopia where stablecoins may not even exist in that world, because they're only sort of a hack and bridge to adoption today. If we actually have a blockchain system where you can be on it end to end, earn based on effort in a specific ecosystem token that's relevant to a specific ecosystem, and pay your taxes if there are taxes, pay your employees, do everything that you need natively on chain. A lot of those reasons for volatility, which is forced buying and selling based on needing to get into fiat to do other things, go away. So stablecoins are a fantastic bridge from today's financial system into a potentially slightly better one, or they're a fantastic bridge from today's financial system into an exponentially different world that I think ultimately is what we're all trying to create here. So when we think about what we need to do in the next 5 years, it's create those step function value propositions that allow us to completely leave the legacy technology behind, but not necessarily driven by sovereigns, driven by individuals.
Okay, some bold predictions for sure, especially from you. So starting with you, going right down the line, why don't you just say one sentence or 2 sentences about why you chose Algorand or what you like about Algorand?
Optimized yield at rest. I stuff my algos in a wallet and I start earning on them immediately, and that's the biggest value driver that we can have in the blockchain space. So we're looking to do that with stable coins as well.
Okay, Rachel.
Yeah, fast, cheap, interoperable, and founded by my alma mater professor.
So scalable, cheap, and a great team.
Jim?
So I'm not going to repeat all those because they're all true, but one thing I want to give a hands up to the engineering team is the SDK is absolutely amazing. There are a lot of blockchains, as you know, but very few are ready for the enterprise. The Java SDK is awesome.
And you guys all said very important things, but you all missed the most important thing, which is my favorite thing about Algorand, and that is community. And we love our community so much, and we love our governors, and we love our builders. And thank you so much, everybody, for being a part of this. And have a rest of a great time at Decipher.
Somewhere